Welcome everyone, thanks for coming. This is a fascinating area. I've been wanting to do this panel for a long time, and we've got incredible speakers tonight. One of them I just have to share with you. Alessandro, thank you. But firstly I want to, because I always do this, I always forget, I wanted to thank Shepard Mullen, and Bill Wyatt tonight is our host. He's hosted the drinks for tonight, and he's just going to say a few words.
Thank you, welcome. This is a very interesting panel, and I was just at the ABA Business Law Section annual meeting a couple of weeks ago in Chicago, and there were a number of panels on FinTech, and in particular one on this topic from kind of a regulatory side. So it'll be very interesting to hear the panel from the technical side. But Shepard Mullen is happy to sponsor these. We're a major law firm of about 800 lawyers spread across the world, but concentrated in California, and we're very happy to be involved in this. So thank you all for coming, and enjoy the panel.
So if you've got regulatory questions after the panel, you know who to go to. Thanks, Bill. So I'd like to turn it over to our moderator, Pierre. Pierre's our moderator a la what? Yeah. One of the best. And I'm going to let you take over. Thank you so much. Welcome.
Thank you. And let's see, is this, oh, it's working. Awesome. So thank you so much for coming tonight. We have a topic that is about smart contracts, and we have smart people. And unfortunately, one of these things is not like the other, so I am not that smart. So we'll try to see if I can keep up and try to engage the conversation. So to start, while I normally avoid getting into your backgrounds because it's all on the website, I was noting what was the group that we have tonight. And I just thought that it was particularly interesting to get at least a little bit about your backgrounds and how you might touch smart contracts in some way, whether it be as investors. And by the way, we have 2 investors and 3 people from early stage companies. So I think we'll get some really diverse answers here. But anyway, so if you have companies you've invested in or have worked with smart contracts or any of that, just some context. You can use this one.
Thank you for having me. It's a pleasure to be here and to be with here again. I was with on my first panel. So I started investing in the space in about 2013 and look at both the infrastructure side as well as the application side, but my primary focus has been on infrastructure. So I haven't spent much time or energy yet from an investment perspective on smart contracts. That said, the ability to create smart contracts is one of the things that drew me to the space. The idea of programmable money or financial tools and the efficiencies that can create on the enterprise level, as well as the clarity that can provide for consumers, is something that drew me to the space. So I'm excited to speak with you about it this evening.
I first got interested in this area back in the 90s. I was at a company called Intertrust. For those who don't know Intertrust, it was digital rights management. You remember.
That's where we met.
That's right. And Intertrust was trying to build a trusted way you could do things like buy music online. It went public. I was the guy who pitched it during the IPO. It's an amazing experience. I can tell you more about that some other time. But in the course of doing this, we got to know a lot of the DigiCash, eCoin type of people out there, like Nick Szabo. And he was working on smart contracts back in '98. He wrote early papers on it. And we were all trying to figure out how do you actually implement this with, in effect, machines to machines doing transactions. With all respect to Shepard Mullen, no lawyers involved. How do you do that? You do the good stuff. This would be the simple stuff, right? And you know, you go through the blockchain and the Bitcoin, and when that occurred, it's like I was gobsmacked. Yes, this is how it could actually happen. It's an amazing thing, what's been created here. So our first investment was a company called Filament, which does Internet of Things, smart contracts, among other things. And it's trying to do smart contracts in a thing environment, not a people environment. So I'm keenly interested in this area, and I think it's going to be one of the profound inventions of the next, say, 20 years.
Very good. My name is Kyle DuPont. I'm the CEO and founder of a company called Ohalo, O-H-A-L-O. So my background, I was basically out in Tokyo for 10 years in various aspects of finance. Then I started my first company after I got tired of finance, as a lot of people do. My first company was actually, the idea in 2012 was to be the first Bitcoin pound exchange, because you can exchange directly. So we went to talk to the UK regulator, and they didn't know what Bitcoin was. I think we were the first people to talk to them about it. And so their main issue was, provenance of funds. And so we built some analytics tools to trace blockchain activity, yada, yada, yada. It turned into a AML KYC workflow company, where it would be really cool if we could share data between different customers that we had to improve our analytics for the blockchain analytics, right? And one of the key barriers to that was actually regulation for personal data. So when you're linking personal data to addresses and things, we couldn't actually share that data. So the idea for Ohalo came from, how can we share data between two different databases that might have conflicting regulations. And so Ohalo works in the automating of data governance space. So we use a blockchain to implement bits of that. So it's a completely distributed application that works in the data governance space. I'll leave it at that for now. I think. Yeah.
And just quick, does that platform use smart contracts in its way of doing that?
Oh, excuse me. Yeah, and so we use smart contracts to essentially provide very strong cryptographic identities and profiles of different data assets that we have in the network. We use it to create audit trails of activity in the network, and to provide essentially a distributed backbone that is important for reasons that are fairly technical that I could get into, but for the sake of time, I'll.
I know I have a question in here on the technical. There's a.
Hi, so I'm Jonathan Levy. I'm a CEO and founder of a company called Etherium. How did I get to this? I'm asking myself this question many times. So many years ago, I wanted to do a PhD in crypto, and I got a lot into kind of zero knowledge proofs before it was even cool. And kind of we built something, it was just a research project, and then I implemented it because I was programming a lot of crypto stuff in the army, and then when I showed it my advisor, they said, look, just quit the PhD, go sell it. And I'm like, really? Yeah, you'll get your PDF later. So yeah, basically I went to London, showed it to S&P, they bought it right away. So that was the first my first exit. But I didn't really kind of realize the value of zero knowledge at the time. It was just like a very quick hack. Moved to finance because we integrated, and I did a lot of credit. And basically I spent like 10 years doing crypto, and then just almost 10 years doing finance. And kind of moved up in the world, did a lot of credit, moved to Goldman Sachs. And what was strong in Goldman Sachs is basically the best thing you have in Goldman Sachs, and they didn't tell much about it back in the day, that they have like a global view. You can always see, so yeah, they have like a very aggressive kind of backend and traders and stuff, but what I really like there is that we built a risk system where everybody can see the exact same risk on every trade, in every kind of trading desk, asset class. You can slice and dice in any way you want. And what we had, we kind of ended up having like a lot of kind of, if you look at it today, like we have some smart contracts. So Goldman has like their own kind of language, it's a scripting language, where it's very easy to kind of deploy, right? So it's similar to Python, and you can have all the logic, which is like a smart contract, but everything was kind of done in-house, and everything is running on kind of calculation pools. And I was thinking, look, when I was in Barclays, I was implementing the exact same model that Goldman is running, and the regulator wants to see the exact same risk reports. And I started thinking, how can we really, instead of me just doing London, New York, Hong Kong, all in sync, can I really do it in a way that we can share stuff? Long story short, Bitcoin came up, it was 2011, I decided, something, I had enough for finance, I've been in credit for too long, I've been through the credit crisis, went to Goldman Sachs, algo trading, the same, flash crash. I said, look, this is too volatile for me, which is kind of funny now that I'm in the lottery. Right? Yeah, so I used to think that 40% volatility is too much, but yeah, this is a year. So now what happened, I still have kind of my compliance, regulatory kind of head, always working with how could I make money while keeping it legal, while being able to make sure that I take advantage of some arbitrage opportunities, But so I worked, by the way, with Nick Szabo in Miro Labs back in the day. I was the chief product officer at some point, and we had a lot of issues with the SEC, and we talked to them many times, and we tried to get like a no action letters. So I was always trying to kind of avoid having a regulatory arbitrage, and more to kind of use the technology to take advantage of the frictionless and the ability to keep in sync. So long story short, because I'm so into kind of the enterprise and finance still, started working, it was Bitcoin at the time before Ethereum was live, worked on Ethereum for a while, built the first class at Stanford for Ethereum, but then started working with the Linux Foundation. IBM came up with a regulatory enterprise production ready blockchain, and we kind of consulted to the research security group, and then got more and more into it. And moved out, became a maintainer, we partnered with IBM. Now we have a platform that sits on top of, I don't know, it's like, we have like 4 blockchains that we work on top, but basically you work with one layer on top of different blockchains, and then we make sure that you meet the regulatory requirements. So it's privacy, compliance, AML, KYC, access control. But the challenge is actually, if you're talking about smart contracts, is how do you have a permission chain that doesn't really kind of end up being a sensor-savvy framework, right? You still want to allow access and allow people to interact on or work in a, I don't know, let's say a consortium without having all these issues that you have now with China, Russia, the US, SEC. Let's try to kind of make sure that we comply with stuff. So it's all smart contracts.
Cool.
Hey, my name is Alex Foto. So back in 2011, I was studying economics, and a friend of mine had the widest eyes I'd almost ever seen on anyone. And he came to me with this paper, and he's like, "Oh my God, I think this is it. This is everything we're studying is going to come out in this complete new tool to change everything." He was just holding the Bitcoin white paper as if it was like his Bible, and he was trying to convert me. And apparently, I was like one of the only people he could find that actually would listen to him. So we sat through it, and I was young, even younger at the time, and I just sort of I recognized that the power to control money and the power to control incentives using that money was immense. But at that time, I had other things to do. So that was 2011 or so. So that was in my mind. My anarchist friend had sort of, told me, "Oh my God, the Occupy movement, all this stuff is going to lead to a new kind of way to do commerce." Coming out of school, I found my first job at Institute for the Future, which is a nonprofit futures think tank in Palo Alto, a really unique place. And we were looking at things that might affect the future of economy, and Bitcoin and its kind of altcoin friends always kept coming up in these blog posts around how, okay, this is interesting that we're doing this peer-to-peer stuff, but this is going to be really interesting. This is going to change everything. So it sort of resurfaced for me. And I was just thinking about this actually 2 months after Ethereum was announced. We had Vitalik, Tim Swanson from R3, Joel.
Not anymore, by the way.
Right. Joel Dietz and Adam B. Levine from Let's Talk Bitcoin in the same room for a talk about how this is all going to affect the future. So at that point, I pretty much cemented for me, this is an important part of how we're going to remake the world. And so I created a program called the Blockchain Futures Lab, where we started to think, okay, we have all these technological affordances, but the world's just not created for us. We have to kind of imbue our values into these systems and really define what we want to do with them. So that was a bunch of kind of leaders of blockchain technology combined with people from corporations, nonprofits, and governments trying to kind of suss out, what are the different scenarios we could end up in, how can we make sure that these things actually work for us. And the smart contract ended up as one of these major leverage points for us to have at least something that we could all agree to the terms for, and that couldn't change after the fact, right? That keystone sort of technology allowed people to have trust in a system that they were going to be using, that they all had kind of a common ground that couldn't be slipped away from under them. So coming out of that, after having helped those folks, I got picked up at Consensus, which is one of the largest companies in the blockchain space. So we're kind of a venture production studio for Ethereum-based decentralized applications. So we have all these experiments around what Ethereum can do that is incredible. It really shows the potential for a complete Turing-complete system. And so we do kind of a whole set of what we call spokes, which are projects or kind of platforms and applications that show what a smart contract at the center can yield. So it's things like identity, things like music distribution, and then we also put those things into practice with enterprises. And that was looking back on my days at IFTF and now in the current sort of business model with Consensus. There's sort of some hand-holding and almost like therapy of working enterprises and traditional financial organizations through it. Like, it's okay. You know, other people are going to help you do what you do well. And that is going to lead to efficiency, that's going to lead to transparency, that's going to give them more power, but hopefully you will still be kind of a facilitator in all this. And so I've focused a lot of my effort at Consensus on the kind of some of the business development pieces, but also this sort of mind shift around trusting our smart contract autonomous escrow friends to manage things and help us create a more equitable financial system.
Cool. So actually, this is a very good segue for my next, much more pedestrian question. How would you define a smart contract? And why don't we go in that direction, because you guys are probably going to give us all the info on that we imagine.
So a smart contract is it's a piece of software that's replicated across a set of computers that everyone can agree was entered at a particular time. And thereafter, it acts like its own account, like a sort of autonomous user account that no one can control, that faithfully follows its orders. And so you can send it money on the system, which basically means that you can send it messages or you can send it data, and it will hold it. And when I say it, I mean we all kind of agree to run this same process and really kind of like update what is known as the state of this thing. So a smart contract, it's a piece of software where people can interact with it, where the result is all known, all the processes are known, and that lets us do really important things where traditionally we might have had to rely on a central intermediary to run those processes. Now we all can keep track of things together and sort of have this software at the center of it that lets us do things peer-to-peer.
Jonathan, Kyle?
So very similar. Well, I wouldn't say it depends on the smart contract, right? So there are two angles to it. It's not that the results are known. It's mostly kind of the logic, or you know what to expect, right? So if we have some logic of if Apple goes above 700, then something is happening, or some conditional execution. But I'm going to take a different style. Instead of kind of coming with a dry answer of like it's a set of instructions that are running in a specific kind of order, I would say that I think that the smart contract is actually smarter if it's not very smart. So it's very important not to put too much smartness and logic and cleverness in a smart contract, because it's something that is executed and it's distributed, and it's very easy to kind of use it if you understand what's going on. So for me, the smarter contracts are actually the ones that are very simple, if, then, and I have two conditions and maybe two variables that are the inputs, and then I know exactly what's going on. And it's the same logic that I apply when we develop, and I don't want the function to be more than 25 lines. The same thing I think should apply to smart contracts. They can interact, they can live together, they can do a lot of things, they have different life cycles, they have different permissioning. I don't want the smart contracts to be too smart so that we don't understand what's going on, because this is where we're going to have all these problems later on. We're going back to 45 kind of pages of term sheets and legal stuff that nobody understands, and that's not too smart.
Yeah, plus one to that. That's it's really important to write very thin smart contracts. Anything that doesn't absolutely need to be shared by everybody in the network should not be in a smart contract. And I think that's actually like how, I don't think there's any smart contract out there that's more than 2,000 lines of code. They're fairly trivial right now.
People are selling smart contracts. It's becoming business.
How many lines of code was the DAO? Sorry, did I say that out loud? Yeah.
I don't know.
Just asking.
Yeah,
I'm just curious.
It's not me.
Too many.
Too many. Yeah. So everything that they said. The only characteristic I would kind of add to that is if you think about like regular computer systems, right? You have a central server somewhere. And then that central server, like you ping it and you have an expected result, but like somebody's managing that. But if you're building a distributed system, you need some way to like make sure that the logic is the same for everybody without the central server. So smart contracts do that essentially. Yeah, I'll leave it at that to not bore you guys with the tip.
So just, first of all, how many people here are programmers? Okay, then how many are not? Okay, I'll speak to the lawyers in the room, I guess. I think smart contract is aptly named, but really widely misunderstood. When we use the word smart, like a smart city or a smart light bulb, or it's just a little bit of intelligence, a little more connectivity. It doesn't mean it's very intelligent. It's not actually smart. So my statement is smart contracts are really dumb. There are things like open door, shut door. I get into this Airbnb from noon on Sunday to 3 o'clock on Tuesday. I was giving an example before at FEMO, which is I get to park my self-driving car in this slot for 3.5 hours, then I gotta leave. So smart contracts are things that can be intelligently done, but they're nothing that would ever jeopardize Shepard Mullen doing a multi-party, financing overseas. So I think of smart contracts that way. The technical side is all very well put, but from the point of view of understanding this to the outside world, they're not clever. My framework on this is I think the way to think about a smart contract is a machine-to-machine contract. So how can a self-driving car negotiate with a parking garage with no human beings? And that is a smart contract in the sense like a smart light or a smart city, because it can happen with no human intervention. It may be a dumb thing that's being contracted for, but the fact that a self-driving car can find a parking spot, negotiate the price, park there, and not get towed is actually quite amazing.
Another critical element, I think, both for the technical people and the non-technical folks in the room is to understand that what a smart contract does is create an efficiency in the agreement or in the maintenance of an agreement. So instead of there having to be a form of governance or oversight or just sheer force of human operations to execute an agreement that was entered into between two parties, you can now have that done with essentially none of that because this is done in the software itself. And what that means to me and why smart contracts are particularly exciting to me for both developed and emerging markets and then in the IoT space is that you can do contracts and make agreements now on essentially no margin, which means you can serve folks in emerging markets, for instance, with traditional financial tools or other forms of agreements, and that you can enter into agreements between machines or actors that essentially can't afford the overhead of a traditional Shepard Mullen oversight contract.
Cool. And, this is an area that's very challenging because, like everything blockchain, it's exaggerated and discussed in ways that we can't even imagine. So, I've heard a lot around FinTech or financial agreements in various trading situations where they're saying, hey, you can just, put a smart contract there. And I'm like, well, there's an issue of dispute resolution. And I think that, a smart contract without the ability to extricate out of that process when needed is not a good smart contract. So, and Alex, sorry.
Yeah, I'd just say, so ultimately all you're doing, if you really look at it, you're not moving, there's nothing money involved. It's like data, right? Ultimately, you're just creating a representation of something that has certain properties that you might use as a money. Or you might use to some other end, right? So it's really boils down to your belief in that symbol, your belief in that data and the integrity of the system that holds it and kind of updates it. Ultimately, you may need to enforce a rule with traditional law enforcement or something, just because it's like you can create a land title system where you're like, I think I own America. I'm going to update that to the Ethereum blockchain. Okay. If you don't have an enforcement mechanism for that, that doesn't really mean much, does it? Your record will be.
Well, no, Pierre's got a bridge, Brooklyn.
That's
amazing. Buy it.
Yeah.
He's happy to sell it to you.
I might stand corrected, but really, it's not enough to create a digital system to shift around data and symbols. You have to create a mental framework and buy-in from a community to really say, if that system has this property, then I promise to do this. So it's as much a social shift as it is a technological shift.
Well, this is where I wish we had an attorney in the room with respect to on the panel, which we had hoped to have, unfortunately had to withdraw. But the challenge, again, it's back to this notion of forgetting about all of the goodwill and community direction you want. There are liability rules and laws, and there are issues that are just unpredictable. And so the notion of putting developers to the task of codifying something more than simple. So I think your simple point was great, because then we get out of the kind of the traditional contract world. So how do you view that discrepancy? I mean, what is the limits of smart contracts? Where are people pushing it to versus where it's really best suited for? Yeah, John, go ahead.
So actually, it's very interesting. Like, we get a lot of business with working with people that tokenize everything, and then they thought, oh, now I can just put something on the blockchain and I can move stuff around and I can move a house or land title or a lot of money, like, with no problem. People forget two things. There's the real world and the real assets. So if somebody claims that he owns America and he sells it just half, why would I pay, right? So that's the first thing, right? How do you digitize stuff? And there's the whole just to take the real world applications and just to put it on some digital form. It doesn't even have to be a blockchain, right? It can be a database, it can be, I don't know, just put it on Twitter. So just to be able to kind of start working with anything that you can move around faster, there is a lot of value in, like, the frictionless, right? Moving stuff faster and using technology, but we need to make sure that we reflect the real world. The second aspect of it, and that's something that people forget, is that the law is the law is the law. So it doesn't matter if you are moving Ether, Bitcoin, if you don't comply with the law, if it's KYC, if it's AML, if you're not reporting, if you're not paying taxes, if you're trading securities, you will end up in jail, even though it's on the blockchain. Actually, especially if it's on a blockchain, because it's auditable, right? So people forget that we still have the normal kind of jurisdictions and security laws. So that's what I'm saying. Like, yeah, everybody's exaggerating. Oh, smart contracts will move faster, but be careful. So even though we work with a lot of regulatory kind of environments and enterprises, there is a big risk of you. I said it at Cybers last year. I said, look, if you don't know what you're doing, first thing to do is not to put it on the blockchain. Because you don't know, right? You're going to expose yourself to some liability, and maybe the laws will come later, and the rules change. And people treat this technology, which is very new, in different ways, and then people take time to evaluate it, and we don't know yet what are the rules. So first comply with the laws that you know, then try to reflect that on the blockchain. It doesn't have to be that smart, just start slow.
Just a comment, again, I look at the Shepard model in the background, but I believe there was an attempt made years ago to normalize contractual language for lawyers. Because anybody who's read a contract clause, then it has provided that, and there's a convoluted recursive sense to it, and you cannot really apply it in all circumstances. This is why I think law is the second oldest profession. It's been around from the beginning. So they failed to come up with a normative way to write a contract where the clauses all would fit in a programmatic way. It's not possible because the ambiguity is inherent in human beings.
Yeah. And sometimes they need it. Sometimes people say,
yeah, they want to keep it ambiguous. That's right. But the point of it is that when people, that's what I was saying before, smart contracts should be thought of as dumb things, because if you start thinking you can somehow take the whole corpus of law and thousands of years of experience with lawyering and stick it into a programmatic form, you are smoking something. And what that is probably ether, but you're smoking something. So go the other way around. Don't try to solve the big problems, solve individual problems. There's an attempt right now with IBM and Walmart to watch the food chain, literally. Pork in China, going through the whole process of being butchered and cleaned and stored and coming to a Walmart in America or something. And you can think of every step of that way. And when I think about that at scale, I begin to realize, even if there's a blockchain transaction, this pig on this day, here's a camera picture of it and all that, there's ways to be fraudulent. You could sneak something in, a picture of a pig. But there's so many points here, in the end there'll be some kind of AI system to look at fraud indications. So you won't ever get the precision you're trying to think you can get into a contract. But you can certainly get something more accurate and less fraudulent than today. And so I think that's how we should think about this, much more than we're going to rewrite the legal system.
I think the conclusion is that smart contracts are unfortunately named. They're neither smart nor contracts.
I
turned it off.
Oh, okay. There has been an attempt recently from our company Consensus with something called Open Law that allows people to write legally compliant contracts that have elements of them that relate back to smart contracts. So it's this attempt to reconcile what Nick Szabo had called wet code versus dry code. This sort of human readable, human interpretable set of parameters. And these things that are very obvious, from just logic. And so I think that the merging of those two worlds means, hopefully that we have at least some things that we can agree upon as being fair and efficient, such that they can inform those other things that humans need to kind of jump in on. And that also jumps to the point of this topic, technical topic called an oracle, which is some kind of service that allows something about the outside world, something that happens off-chain or isn't represented by the contract logic, to be represented back onto the chain. So that might mean, a human reporter kind of signing off that something has happened or something is at a certain price, or an algorithmic sort of unit doing that, or a machine or something kind of running that process. And so there still might be situations where we just need a human signature that something happened, leaving all that to the human, and yet still that might be an automatable process and one that can still benefit from the efficiencies of smart contracts.
So Kyle, in your company, with respect to this combining of data and managing this, so how do you apply smart contracts? But give us a little bit more. Like, tell us about how do you, first of all, start that process? How do you audit that process? And how do you get comfort around that it's working? Because you're about to set this loose. Right.
Yeah, so are you saying, like, what is the development process?
Yeah.
Yeah.
I mean, like, who's involved in, is it the traditional developer team, or is there other?
I mean, we have one of the guys that wrote part of the Solidity language on our team. He's a really talented guy. He wrote the basic stuff. Me and another dev on our team kind of followed it up. So, getting the functionality there, I guess, is the first thing you need to do, like any other program.
Mm-hmm.
And then I think you have to be really careful about doing a lot of code coverage as far as unit testing.
But what is the, and let me maybe touch a little bit further. I'm trying to get a sense for, in the data cleaning and...
Oh, so in our particular use case.
Yeah, like what would you, give us a sense of that.
Yeah, I mean, so we did definitely go through like a lot of iterations, because it's like, it was super early days and we didn't really know, we went through a couple iterations of the architecture in essence. So the main qualifications we had was that if you deploy something on a blockchain, it will be visible to everybody. And you might not want that sometimes, right? There's privacy implications to that. So there's a common pattern, I think, in deploying distributed applications and taking hashes of data or some sort of audit trail of data, putting that as an audit trail on the blockchain, referring to that hash as a proof, right, between different applications. So for keeping the audit trails, the metadata about the data itself is actually stored off-chain. And then the proof of that metadata is stored on-chain, but only the two, not without knowing in depth about what we do, but only the two services that are concerned with a particular piece of data know what that proof means, because they have the data and can, the metadata rather. The other stuff that we needed were ways to tell in a very strong way who is who on the chain. So if you have a requirement to understand, like, this person is definitely a bank data asset that's mortgage data, right? It's owned by some sort of legal entity in the European Union. It needs to comply with certain European Union laws around data protection, et cetera. So we need to kind of make sure that this data is very strongly attested to, so that you can be sure that not only who the person is, but the characteristics of that person. So that stuff is on chain as well. So keeping profiles of services, et cetera. And then pretty basic stuff like account management and things like that are also on chain, but those are fairly standard things in any sort of system, but aren't really natively on the blockchain.
Cool. Jonathan, could you give us a sense? I know you got a little bit deeper, and you're actually working with a number of blockchains.
Yes.
So how does smart contracts play into a multi-blockchain?
So for us it was very interesting, because we started as a team of cryptographers. So it's all like low-level stuff, hardcore, writing in C. And now we need to kind of work with kind of as a layer on top of blockchain, try to make it user-friendly, a lot of usability, while still keeping it secure. So I think it was a year ago when we decided, okay, look, no cryptographer is touching the smart contract. There's a threshold. If you kind of over it, you don't touch it. So we have 3 business analysts, and they are the ones who are actually writing the logic. And what's interesting in our process is basically we really try to dumb down the smart contract. So most of the logic in terms of the permissioning and the identity and who can see what and who can share what and how you build a consortium that has some hierarchy, right? So let's say I have like 5 banks and I have 5 employees from Goldman Sachs, a few from Morgan Stanley, I don't know, Santander. So we basically relay all the liability to the counterparty. So all the parties are coming in and they can bring in their own users. All this logic is in the framework. When you go to the smart contract, the smart contract basically is looking for the properties. If you belong to this organization or if you got this approval from that guy, then you do something. And that logic is very, very simple. And we can also agree and shake on it. And it's very easy for the consortium to agree on, okay, we are going to buy into that contract. So it's kind of, this is why I said before, like when you work with blockchain and if you look at the modern age, even if you look at parking, ticketing, time, anything that you need, like a proof of time, proof of stake, or whatever it is, it's very important that you change the business process so that it's all reflected in the smart contracts. If you take a step back, blockchain gives you like blocks, and it's a state machine, and everybody has a copy, and we have an approval process. All you need to have the smart contract to do, mostly, is basically the approval on the change of state. So if you got the business process right, your smart contract is only very, very simple. Did they pay? Okay, how much? For how long? Who verified it? Am I still there? What's my location? Am I out? And every time it's like a Boolean, yes, no, yes, no, yes, no.
100%.
Right? So what you need to do is to, basically, I just have a state machine and I go to like from state 1 to 2 or to 3, subject to some condition. And it can be either time, or some external event. I have an oracle that tells me what's the price of Apple, or some other event that occurs and then I react to it. But it should be very simple for you to understand the workflow, and the business analyst should write a smart contract. Yeah.
So Alex, the other, probably in vogue use of smart contracts right now is the ICOs. They're kind of really one of the applications of the Ethereum blockchain that's really taken off. Can you talk to us about how smart contracts work on ICOs?
This one is touchy, and we don't use the term you mentioned.
I'm sorry, I'm talking about the token launches, token offers,
whatever you call
sales, or anything that's not ICO, since
right.
Your sensibility.
No, and like I think it's hilarious, but I also think it's important, right? Not only for regulatory reasons, but also like expectation setting. So we've created economies around certain things. People import their old beliefs into these new systems, and sometimes that could lead to mistakes and harmful behavior. So I think getting this stuff right matters. But one of the major important things that that these things afford is this ability to all agree on a symbol that we've imbued with some power, some value. And so what people have come to realize is that they can with the click of a mouse, launch an economy, an entire sort of monetary system at a whim. And even as far back, shortly after Bitcoin was created, there were immediately services like Namecoin and just a whole bunch of projects. Dogecoin.
But those weren't smart contracts. Those were literally rebuilding new blockchains.
Well, yeah, right. I mean, so they were different forms of software that kind of copied Bitcoin's code. And that, so they acted in a similar way, with some small parameter tweaks, probably just the name in a lot of these cases, right? But actually, I mean, so we using the term smart contract, people fail to realize like, Bitcoin has its own scripting language, and it has a pretty simple smart contract that it kind of runs. Does a Bitcoin have an unspent transaction that can be associated with an account? Yes. Can you present a private key that can produce a signature saying that you have unique access to this account? Yes. Okay, who do you want to send it to? How much? Do you know the public key of this person? Or the address of this person? So if all those factors pan out, you could submit this transaction and it'll be recognized by other people. Their software recognizes that. So that's actually, it's a simple thing. It does one particular thing. So when Vitalik set out to create Ethereum, he was a huge fan of Bitcoin and had created Bitcoin Magazine and realized that this was a really limited smart contract system. He had seen that a lot of other people were inspired by this and had created their own monies that were sort of proto what you see today, and had noted that they had certain limitations, that they couldn't really unlock the power of scripting in a really robust way. So he set out to create Ethereum to expand the list of things that you could do by creating what's called the Ethereum virtual machine, which is basically like its own little sort of mini computer that we all run on our computers that can help process these things. And so the big push around these is to create sort of valuable tokens, valuable sort of symbols that people can trace people can trace as they move forward through things. And the hope is that those can help meter access to certain kinds of utilities, right? So you would hope that those things that we pass around and that perhaps in some cases we actually buy will provide you access to a scarce resource like computing power, or maybe it's good enough to just have a money system or something. So the big push around this, people have it's dawned on them, oh my God, this could be anything, this we can create any kind of symbol with any kind of script that we can set out to have people buy and sort of manage these shared resources. And so there are varying levels of robustness of the actual business case and what these things might, if these things might have the same kind of value that people expect over time. But I think it's interesting that this sort of Pandora's box has been opened and that people are now starting to experiment with their own microeconomies.
Yes. Elise, have you seen any applications that you're aware of using smart contracts that excite you more than others?
Sure. Well, to circle back to what I said initially around how being able to execute on agreements with lower margin allows us to create new kinds of agreements. Some things that I've seen that are particularly interesting will also reference to what the last speaker said around the exchange of resources or device level resources for a cryptocurrency value or a way to tokenize the resource. I'm beginning to work with a company now that's introducing a mesh network in which a smart contract can allow for the exchange of data and essentially connectivity access in return for a token. And you can represent yourself on this network per smart contract, essentially, by way of how you'd like to be a participant or what kind of stakeholder. So what's interesting about what this company is doing is that because a smart contract can be used to create these types of stakeholder identities and then contributions to the system, you can then introduce a mesh network to an economy that perhaps lacks the infrastructure that we have in our own developed market. And you can bring folks online or allow them to connect to their neighbors in a more robust way for the very first time. A second group, and let me say this, what's also interesting about this company is that to actually have scale to the network, you should reward and allow economic participation in the network by end users. So essentially, if you've read Fred Wilson's work on how to properly tokenize the network effect such that players are more incented to participate and compensated for that, this is a company that's actually found a way to do that through smart tokens. Second, I'm working with a company called BitGive. Has anyone heard of BitGive in the audience? The first 501c3 in the Bitcoin space. What Connie Gillespie has found is that if you put charitable giving or participation onto a smart contract such that you can connect charitable donors to the end users essentially of that charitable money, you can create a communication gateway between the two and a trust relationship that hopefully incents the donors to give more or to be more committed to the end result. And again, this is possible because you can enter into an agreement that's executed and observed at a lower margin because you take humans out of the system.
Well, I love your first example. For those of you who don't know the cell system.
You missed the round.
Yeah, I know, I've got another one, dude. It's okay. But if you provision a SIM, it actually costs the cell system a lot of money. I saw at one point $1,000. I think it's dropped since then, but they've got to provision these things called HLRs and VLRs all over the world. So you got to sort of populate it like router, blah, 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 blah. So you can make a phone call in Mozambique and it ends up dialing here. It's when you compare that to the internet, you just do a DNS call, bam, bam, and it's much simpler. Now, what she's talking about is you can imagine a new network, and maybe it won't start with voice, maybe it starts with Internet of Things data, in which the cell towers now can be simple access points. The provisioning of somebody in has to be really cheap. There may be 1 billion of these a year, there's going to be 1 trillion things. You've got to get it so cheap, you can't spend $1,000 and $100 per 1 trillion things. You just can't do it. So her system is brilliant in that when you do this, the provisioning is almost automatic through the blockchain. You don't need to provision little HLRs, VLRs. You do a quick lookup, and anybody can join it in effect. And then you just have to find a way to share the use of that access point. So if somebody here puts up an access point on this building, maybe Shepard Mullen could do this. You might get all this traffic flowing through there, and you might say it costs 1 Satoshi a bit or something. In which case, or a Mullen coin a bit. In which case, anybody wanting to use your access point can do it automatically, no human beings, no lawyers. It's a smart contract. It's a dumb thing, but a smart contract. Bam, you can use it if you're willing to pay the Satoshi for the access to it. So I love that example. An example I think that's happened very quickly is we've seen an ICO from Civic. Some of you probably know Benny Langham, right? There's several others out there I find really interesting. These are more around identity. So I mentioned this pig example in the food chain all the way to Walmart. But go back to Apple again. If you go on Amazon and you buy some charger that looks like it's Apple approved, it's got all the right markings on it, and it's the right color, and it's probably Apple white, it could be some cheap knockoff that got into Amazon. There are estimates that there's a lot of stuff like that being sold through Amazon. I used to buy batteries from Amazon. I won't anymore because they last like 2 days, lithium, because they're cheap knockoffs. You're Apple, and the problem you have is, if I put a charger into that phone and fry the phone, I call Apple. I don't call Amazon, I don't call the charging company. So let's say they wanted to use one of these systems that they have approved factories around the world and approved lines and approved devices. And when they come off, they all get blockchain. Bam, this was made on this date in this factory in Shenzhen, and this is the item. And then it goes chain of custody to the distributor, to the warehouse, eventually gets to Amazon. A bunch of points along the way. If they track every single point and use some AI to say, okay, there was a delay loop here, maybe we flagged that as possibly a cheat. When it gets on Amazon, you go look for it, you could have an automatic certification. This is truly an Apple-approved product. Bam, you can buy it with trust. That type of thing is going to happen, I think, pretty quickly. It's already happening with Walmart and IBM. I think Apple's going to figure out how to do this too. And no lawyers involved, sorry, Shepard Mullen, but the system itself will give a lot of trust to people trying to buy some scabby device on Amazon at a lower transaction cost, which you love. So I think that's going to happen quickly.
So I'm not I don't think it'll happen as quickly as you think it will, because the issues around supply chains, it's not so much the tracking of the thing once it's in the supply chain, it is how does it enter the supply chain. So one of the big things that I loved hearing was, especially around agriculture, and we want to make sure that it's farmers who are not abusing kids and not doing all these things. And I'm like, great. So how's it going to get into the supply chain? Well, who's going to put the information in? How's it going to get in? And you start to figure out, well, there's not enough inspectors to watch every entry of everything that's going in. So the problem is that once it enters the supply chain, you have no way to control that.
I will comment. I think there's a bunch of laws being passed for the pharmaceutical industry where they're going to have to track it all the way to you, and if you return it, they're going to track the bottles. So
and again, I think in some categories it may work. You're right.
It may not be farms.
Yeah. So this brings it to, I think, the more important question, which these are applications that, wow, I mean, each of them is sizable. The data, a lot of what's going on here. We're talking about running this on blockchains that effectively are the antithesis of efficiency. It is a copy of the same thing on every computer that's part of that blockchain. So what has to happen for, we're putting a lot of trust here. What has to happen? And why don't you guys jump in, because you're probably having to think about the scaling issues. I mean, already Ethereum has, is already reaching the scale level that Bitcoin took a lot longer for Bitcoin to reach. So how do you think about this?
Yeah, sure.
Or maybe you don't, and you just say, hey, we're rolling with it.
No, I'm not concerned. Yeah, I'm not
Even
concerned
in poverty.
with scalability.
It's not my business, man.
We run a private chain actually for exactly these reasons, and they have different ways of enforcing.
Sorry, a private chain. So you're running a permission blockchain that you guys control,
right.
and
So,
only members.
Yeah, correct. So we run proof of authority consensus protocols, and they have higher throughput essentially. But we eventually want to move to a public chain when they become a bit more robust. From a performance standpoint. The two projects that I'm eager to see come to production are one, Casper, which is a move from proof of work to proof of stake. And essentially what that means is right now you spend a lot of computing resources to enforce the activity on the chain, and in the future you'll basically have miners paying money in an escrow account essentially to to validate blocks, and then if anybody does something bad, they lose that money, right? And so that's kind of how it enforces trying to enforces the logic on the chain. And the second one is Plasma, which is essentially a bunch of what are called like side chains that only check against the network every once in a while. So you can have a very performant, for instance, private chain that all a certain group of people agree that this is going to be the protocol, and then every once in a while it'll check against the public chain to get the robust security of the public chain.
Okay.
So those are the two, Plasma and Casper are my two things that I'm excited about. Yeah.
Cool.
So yeah, I want to say something that is not so popular actually. Not everything should be on the blockchain. I know.
Thank you for saying
that. So you need to think about when do you really need the blockchain, right? It's not efficient. You have privacy kind of constraints. You share a lot of data, a lot more data than.
I'm sorry. On the privacy issue, I think take it out of privacy. You have competitive issues. Mm-hmm. If you're competitors, it's not a privacy matter. It's a competitive issue.
Okay, so I can answer that very well because we're doing the enterprise consortium kind of chains, right? And what people forget is these guys are not your friend. When you have a blockchain that is private or permissioned, or it's basically you're looking at participants that are in the same sector. So last week I was talking at Distributed Health, and we talked about global identity. And then we had to explain to people, look, you have to understand, like, banks don't have the problem of how do I get all the patient information and just email it to each other. They know how to do that. That's not the issue, right? The issue is how can they use this data in a way that kind of meet compliance, HIPAA, etc. Also, they are able to use it. So, for example, they want to sell some data or use some data for joint trials. But the main problem is not the trust of me not knowing who these people are. I just don't know what they're going to do with the data. Your patient as a hospital are actually your customers. Why would I tell you how much people are buying from my shop when you have a shop, right? So the concern is not just scaling in the sense of like how many transactions we can have, is basically how do we really build a business model that makes sense to use in a blockchain, right? So you have to come in, I'm always getting back to the business process management, right? So if you need proof of time, if you need to prove that something happened, if people don't trust each other, then you need to think about a blockchain or a decentralized solution. But if everybody is agreeing or trusting, I don't know, let's say Google, we can just use a mailing list and just send an email to everybody and everybody saw my report. So it really depends on the use cases. Not everything should be on a blockchain.
Well, this is part of the concern I've always had with private permission blockchains. They espouse the benefits of the public blockchains, except that they can't possibly deliver on those. They can't, the trust, the consensus algorithms are limited to a number of players. One can be compromised. There's all these problems. So.
All these tokens, like most enterprises we talk to, from Max to you name it, right? In IoT, in healthcare, in financials, in insurance, most of them don't actually want a token with a value that they cannot control.
Right.
And I tell you, look, John, all I want to have the track record, I want the blockchain, I want the signatures, I want the approvals. I don't want to buy something to a currency that actually moves out 30% overnight, right? And vice versa. So, yeah, the token is actually a bigger problem.
Yeah.
I just wanted to make, dead battery.
Sure.
I didn't even notice.
I know.
You did good. We have an echo chamber.
Probably for the benefit of the remote folks in the fleet. But just a point on efficiency. So I've heard from some people who were very, very early on in the Bitcoin space. You have to use the word efficiency carefully, right? Like if it takes the country of Ireland's worth of energy to make a system that can't be broken, then that's pretty efficient. You've created something that is what it took to accomplish that threat model worth of security. I think I'd probably just echo what other people have said here is you kind of have to right size the solution for your threat model, and that takes some doing, right? So back to the question you were asking around auditing. This isn't just technology auditing. Like there's formal proofs and lots of other cool technologies for making sure that your code is all straight, but there's some just common sense and actually not common sense economic reasoning that plays into this stuff. So even an advanced system like Casper really rests on some assumptions that may or may not prove to actually be true. Proof of work so far has been really useful because it means that your computer does a process that you can be very, very sure could only have been accomplished if you put a certain amount of energy in. That's important, right? And if that satisfies our needs, if that satisfies our threat model, and if we're willing to pay for that security, then so be it. But I'm excited to see what happens with the developments in Ethereum and some other systems that have come on. Ethereum's not the first to implement proof of stake. I think Tendermint would hold that. There are a whole bunch of other systems that are experimenting at the edges of this stuff, and really, it's just a question of human rationality and how we all want to be nice to each other and maintain this data commons and this economy.
So I think there's a lot of miners out there in the Ethereum world who probably are hoping that never happens because it's an economic issue to them. But we'll see. Start thinking of your questions. I'm going to ask one last one, and then I'm going to start going for the audience and see if you have some thoughts. So the last question is, smart contracts, what worries you most about them? And given the progress they're going through and the challenges they're going through, what's the most worrisome part of that ecosystem?
I suppose one thing that I worry about, or perhaps am hopeful for, is that data ownership can be redefined, or at least personal data ownership can be redefined in the business models that exist around smart contracts. So for instance, to reference back to the healthcare example, when health institutions are working together to share your data between one another, my hope is that it's actually represented or thought of as your data that you're sharing between institutions versus institutions sharing back and forth. We have an opportunity now to, by innovating or being suggestive on the business model side, to make these sorts of changes, and my fear is that we don't. My hope is that we will.
My fear is that people solve the wrong problem. I'm hearing from the panelists here, they're all working on the right problems. But for example, this idea that you can clear a coin transaction as fast as First Data clears a Visa is ridiculous. It's not what the problem is right now. And the idea that a smart contract can be very sophisticated and replace a lawyer, it's not what the problem is right now. So my worry is we get way out over our skis, so to speak, in trying to solve these problems. And it'll be compounded if a lot of these ICOs or token offerings end up crashing and burning and put a damper on the whole industry.
I think that my biggest fear is immature developer hubris, really. Like developers trying to build tokens that have actual economic value in them, and those get hacked because of crappy code. I mean, there's, people can...
Can I ask you a question on that?
Yeah.
Do you fear that more, or do you fear the business talent not catching up to the level of technical insight or innovation happening such that the models don't match or complement the technical capabilities?
Sorry, can you repeat that? The business
You're
talent
worried
not
about-
getting
So
it.
I think it's, so what you said is interesting to me because in discussions I have offline, there's more of the opposite fear expressed, which is that really early in the space, the technical talent that came in, it's the best engineers in the world, right?
Totally.
And perhaps the business talent has taken longer to catch up. And so do the business models or the areas of business innovation that will be matched to the technical innovation, will it be worthy of the tech or the talent?
Yeah, no, I still stand by my first one, I think, but that's definitely another one that I'm very cognizant of, that there are pretty crappy business models around a lot of things as well. So good code and good business models are good.
Still important. Still.
So yeah, in the context of smart contracts, what I'm worried about is that, and actually I got a lot of kind of grief from the community because I worked on the permissionless chains. I worked on Bitcoin and Ethereum at the beginning. Then I kind of moved to the dark side, rather than back in Wall Street with the 1% and not the 99%. But we're trying to bridge it, right? We're trying to make access control kind of accessible, and we're trying to have permission chains that basically have like data that is kind of curated and people kind of approve and sign it and verify it. But my deep concern is actually if you're going to automate everything, we're not going to have a lot of room for creativity. And I'm also worried about, like, we're trying to do it in a way that you will still be able to have some censorship, resistance kind of components. You will still be able to move around the world without everybody tracking you. We kind of got involved with the smart Dubai thing at some point, and then I realized, look, I'm not sure how the system is going to be used. So I'm really worried about a government taking advantage of us working so much to decentralize, empower the people, but then people controlling a lot more data than we are aware of.
Yeah, I would just say, so these things are very powerful machines, and they codify what we want to do in the world, and they make it very powerful and efficient, right? So, there have been noted examples of for example, like Airbnb creating a technology that they thought was fairly benign, but that reinforced racial bias. And there are all kinds of notable examples where business models that we might have thought would lead to a reduction in poverty might have actually increased it by pricing out traditional merchants. So we're making economic systems. We now have the power to kind of redesign all this stuff, and an economy and society is a very complex thing. It's evolved over a long period of time, and I think we need to be humble about the kinds of interactions that we begin to set out to make more efficient and to change. And I hope that we really focus on the primitives of the things that we understand and that we hope work better, that we can watch and start to build on those rather than boiling the ocean and trying to kind of revolutionize things without first fixing some of the social biases and some of the social issues that we have. So I think that these systems need to be sort of developed and driven with an eye toward the kinds of things we want to see in the world. So code's not enough. It really comes down to sort of a human mind shift.
Cool. So I was just notified we have time for one more question. So I'm going to see hands, and if somebody has a question they'd like to ask the panel, okay, there you go.
Say the adoption rate continues to take up. Oh, there you go. The adoption rate continues to take up for Bitcoin, Ethereum, blockchain, across your diverse industries, across your investments. What jobs do you think will be lost first, and what jobs do you think will be created first?
No jobs people here. What's up with that?
I think it's very hard for central planners to figure out what jobs are going to get created or lost. I mean, when the car came in, the buggy whip went away. There weren't people envisioning all the jobs that got created by the car industry. So in some extent, if that's the test, human beings will fail that test. But in general, I think what's going to happen here is the developers in this industry are going to create these systems which have her desire of lowering transaction costs. When you lower transaction costs, a lot more stuff can happen. the job's going to get created at a much higher level. So the jobs will not necessarily be at the level of coding. It's going to be what you do with these systems. So I can give you a longer explanation if you want, but I don't think the challenges, put differently, there's the Luddite fallacy every 30 years. You've probably heard of the Luddites, right? And they did lose their jobs, but many more jobs were created. So the Luddite fallacy is look at the specific and miss the bigger picture that you're not looking at. And the history of technology for 200 years has been vastly more jobs are created when something like this comes in and lowers transaction costs than the jobs that get lost. But you can't envision them. I would say, I was in China talking to a technical university, and I did something which I culturally shouldn't have, because they're all getting trained to do specific jobs when they graduate. And so they was asked a question. I told them I thought half the jobs of the next 15 years don't exist yet today. They'll be created. And somebody said, well, how do we train, how do we get a degree for that? So I said, you got to be more critical thinking and flexible. And that was like, oh, you can't say that here. But that's the truth. Half the jobs that are probably interesting are going to be created in the next 15 years. They don't exist today. So you can't sit here and think of what they are.
I throw in a little wrench to that. If you look at like financial firms, your operating expenditures for back office settlement and is just doing KYC for any sort of private deals is extensive. It's 15 to 30% of operating budgets. So if you think of all the financial transactions that currently exist in our circulation.
I'm waiting to answer.
Yeah, that was going to be my answer too. So, I mean, basically, like we're seeing the fastest adoption among banks in the very short term. I think that we'll see, back office bank staff be cut.
Yeah, so I think I think that many bankers are gonna not maybe lose their jobs, but they'll have to transition. So when I was on a credit correlation desk, we had a lot of exotic risk, right? So you come in and you have like CDSs and CDOs, and everything was over the counter, and there was no regulations and there was no standards. Once we had standards, and we got just one simple rule. The rule was that you will not be able to give somebody a quote unless you see your risk. So I cannot just come in, I think 21, no, 18, let's put it in the book, and then tomorrow we'll see what's going on. So the minute that was kind of put into force and it was enforced, there was no need for having over-the-counter calls in the first place, right? Because you have a system and then you just agree on the margin. So all these guys kind of started moving to more algo trading credit. So they didn't really lose their job, so just change it. So, but if you want to, maybe not in 15 years, but my vision, and even as a banker that works with financial institutions, I think the revolution is going to be more massive than people anticipate. It's going to be more than just me submitting a proof of something happening. Here is a nice thing, and I'm not even drunk. So you're going to have a world where you're going to have some tokens or keys or all your assets that are going to be there, and then you are going to plug it in to some other bank, and they will manage it, and you pay a fee for that. Just like you're parking your car and you pay rent, they're going to do something like that with asset management. So instead of you moving all your money to something asset management and they running it for you, you're actually going to hold it, and then you will see what they do with your money. So you're not going to do the asset transfer in the first place. That's something that's very nice. So you own your data, your wallet, your everything. You move around, temporarily give somebody some rights to it, and they will manage for you for a fee. We don't have it today, but yeah.
So I want to thank the panel and Pierre. Thank you so much. It's been fantastic.